Hey traders, Jeff coming to you here, Full Throttle Traders. Welcome back. We'll take a second here to show you our trade on Tesla we did. We ended up taking profits, well, expired today on 12/6 and took a bull put credit spread at 355 by 350. And I'm going to show you the details on that here. So stay with me and I'll kind of walk you through that. Once again, there's 12/6 test. We took the expired December 6th. We took this on the 4th or the 5th. 355 by 350 bull put credit spread. We've been getting out 246 profit. Only took 5 contracts. Why? Because the exposure on that, the 50-cent risk, the 50-cent average price is about $2,250. And like I said before, we don't want to put ourselves in that position. So we just do a lot of these. We have a 90% success rate in these, fortunately, but we always keep our risks smaller because that black swan event will step up and bite you one day, and you don't want to have work your way out of that cave. It's going to take you weeks and sometimes months to do that. So we keep these lower, but we make smaller amount of money, but we do them more frequently, protecting that black swan. Take a look at the trade here. First off, trading options can result in financial loss, substantial, involves risk. This is for educational purpose only, not to be considered financial advice or guarantee of results. Again, we don't guarantee profits. We all know that, but I like to show that each time just so you gotta remind yourselves. Tesla daily chart, once again, you can see 8-period moving average holding up nice. Did a kind of retested the top. Sellers came in, taking some profits, came back, closed under the 8. It definitely got my attention right there, but did once. I'm typically looking for that to happen twice. My alarm started going off. It closed once, came right back up in the gap, came in here back to 3 times test, taking supply off the market each and every time, particularly after a wide range bar that ignited there. That's where you get a lot of the big selling that ends up coming back at that point. You can see we took it off with a vengeance on a wide bar here. Take a look at the 65-minute chart drilling down here. This has a high probability rate or a low failure rate once they start breaking out supply in that kind of environment, that type of stance. We got into the second bar right here, pull back exactly right about 50%. Still held the 8-period moving average, just went sideways. Didn't even need this bar. We were at full profit here pretty much most of today, but that was just kind of icing on the cake here. Had a 5-wide spread. Again, $246, just set it, forget it. We just got out of one that had a nice profit of about 70 cents per contract or $70 per contract yesterday. And there were other ones Google got out. There's just a lot of these going on at one time. But again, we keep our risks a little bit smaller in this. Usually, and I'll show you like the IWM, like I have 19 contracts that I just sold off. I'll show you that here in just a second. Let's see if I can pull it over now real quick. You can kind of get an idea. This is what's still open in our chart on our trading platform at Full Throttle. You can see there's the Tesla we're out of right here that took this snapshot just before the market closed. Got out of 19, got out of 10 contracts here, took a $450 profit yesterday, $450 still unrealized. We'll take that out on Monday, probably. It's about $1,000, $900,000 gain. Sitting on the long-dated SPX 6310 bear call spread. That's got $3 that should be burning as we get the expiration closer. And then have 500 shares of HPQ showing relative weakness down here. So we'll hopefully be able to come out of that here sooner than later. But again, nice play here. Very easy money on this. A lot of these we have a high rate. We don't need this stock to necessarily go higher. It did. We just consider it go sideways and in time even pull back. As long as it stays above 355, we have the same exact profit if it's at 355.01 as it is at 390. Nothing changes. It's to the penny of profit is the same here as it is right here. But you don't want them closing down into here or even worse below that lower dollar strike because of the the short strike and the long strike. Then you're basically would have a full loss at that point in time. Anyway, hope that helps. If you want to join us at fullthrottletraders.com, you're welcome to. Send me an email, Jeff at Full Throttle Traders. If you have any questions, would like a Zoom call, no cost, we have to do that with you as well. Hope this was helpful. Just little things that we do along the way. I'm just kind of hitting the highlights here, but you kind of see how we're doing it at Full Throttle. And we'll keep doing more of these as the days and weeks come on. I'm going to switch gears into diagonals probably next week a little bit, kind of show you how we're actually participating in the diagonal spreads. And of course, some of the day trades that we're still going to continue doing, and also some of the credit spreads as well. So hope to see you again. Thanks again for your time. See you next week.